Swing trading? Really? You think that's your path to financial freedom? Huh. Hey, maybe you actually believe those YouTubers with the colorful thumbnails and "I quit my job to swing trade full-time" captions. You know the ones. Sitting in their rented Lambos with more indicators on their charts than brain cells in their heads. Well, guess what? You just hit a damn jackpot by landing here. Yeah, you. Whether you clicked this by accident or curiosity, congrats. No sarcasm there, congrats. You've officially found the most brutally honest breakdown of swing trading you'll ever hear. This is Traxing. This isn't your safe space. This is where your delusions come to die. Let's not play games. The topic is swing trading. The truth? It's either your best friend or your silent killer, depending on how deep your ignorance runs. Most of you think swing trading means less time on charts and more time sipping coffee waiting for your positions to play out. Uh-oh, yeah, no. That's not swing trading. That's laziness dressed up in buzzwords. And the market? Oh, it loves lazy traders. It eats them, digests them, and then uses their tears to lubricate the liquidity pool. Before we dig in deeper, here's something you need to stamp into your head. We're not here drawing lines for fun. We are real analysts. We don't guess, we calculate. We don't hope, we confirm. And we don't sell dreams, we expose lies. At Traxing, everything is built on data, facts, and the painful truths no one wants to say out loud. Because most of the trading content you consume is like junk food. Cheap, tasty, but slowly rotting your account from the inside. Now let's strip the glitter off this swing trading fantasy. What even is swing trading, huh? Ask 10 traders and you'll get 11 answers. It's trading that holds positions for a few days to weeks. Yeah, no shot, Sherlock. But what they won't tell you is the psychological warfare it unleashes on your brain. You've got to sit there, watching price flirt with your entry, caress your stop loss, and then spike in your direction just after you closed in fear. Sounds familiar? That's not a market move. That's a market mocking you. Let's assume you're trying swing trading because you don't want to be a scalper. Too much time, too much noise, right? You think swing trading is the peaceful option. You want peaceful? Go do yoga. This is trading. It's never peaceful. Swing trading isn't less intense. It's just intense in slow motion. It's like being stalked by a snail with a knife. Every candle is like a heartbeat. Every consolidation zone, a psychological maze. If you don't know how to read multi-time frame structure and align it with macro data, you're not a swing trader. You're a position holder with a gambling habit. But I'm using support and resistance. Oh, cute. Let me guess, you drew your lines with a ruler and waited for a bounce? Did it bounce the wrong way? Huh. Weird. Maybe because you ignored volume, ignored sentiment, ignored fundamentals. You treated the market like a video game, and now it's rage quitting you back. Welcome to Traxing, where we slap you back to reality. Let's go deeper. Swing trading, when done right, is a calculated, methodical system based on trend continuity, macroeconomic timing, sentiment structure, and risk profiling. It is not about catching every move. It's about knowing which moves are worth holding through volatility. Imagine trying to hold a position through NFP, CPI data, or a rate hike from Jerome Powell, and you're out here basing your entry on a golden cross? Really? That's like bringing a spoon to a gunfight. You're not swing trading, you're suicide swinging. The truth is, swing trading demands more knowledge than scalping, not less. You need to understand fundamentals deeply, like what's driving this pair, this asset, this coin, this week, this month, and this quarter. You need to know who's buying, who's hedging, who's panicking. Because if you enter based only on candlestick patterns or RSI divergence, congratulations, you've become a perfectly optimized liquidity donation bot. Let me give you a case that stings. Imagine entering EUR/USD long on Monday because you saw a bullish engulfing candle on the daily. Ooh, big boy move. You set your stop, 80 pips. You aim for 180 pips. Risk reward, solid, right? But you missed one thing. ECB meeting on Thursday, and guess what? Hawkish surprise. EUR/USD nosedives. You're stopped out before Thursday, and the next day, price rebounds and hits your original TP. You were right, and still lost. Why? Because you're trading blind. Swing trading doesn't forgive ignorance. It punishes it, slowly and with zero mercy. You ever sat through a swing trade on a Friday afternoon just to get gapped open against you on Monday? Yeah, that's swing trading reality. It doesn't care about your hopes. It doesn't care about your strategy video from FX Guru 9000 on YouTube. The market doesn't owe you shh. You think swing trading gives you freedom? Only if you understand time. Time is the most underestimated factor in trading, and swing traders must master it. Entry timing, exit timing, news timing, liquidity timing. If you don't grasp how market sessions flow and overlap, you're just entering at random and praying the market is kind this week. Spoiler alert, it's not. It's never kind. It's cold-blooded and loves feeding on weak entries wrapped in false confidence. And don't even get me started on over-leveraging. Swing trades with 50x leverage? What are you doing? You're not swing trading. You're just scalping with a death wish. You can't give trades time to breathe when your margin gets choked by a tiny retracement. The bigger your stop, the smaller your lot. Simple math, but apparently too advanced for TikTok traders. Want to know what real swing traders do? We plan. We forecast scenarios. We have fundamental catalysts lined up. We understand seasonality. We know how to use correlations. We can link the oil price to USD CAD. We know why gold spikes when the bond yields drop. We trade with context. You still drawing rectangles on TradingView like it's finger painting day at kindergarten. Let's assume you're getting defensive now. But I'm profitable. Cool, show me your equity curve. Not screenshots, not cherry-picked MT4 history. Show me consistency. Show me patience. Show me the trades you didn't take. Because real swing traders say no more than they say yes. If you're entering 3 swing trades per day, you're not trading. You're gambling with a calendar. This might hurt, but Traxing doesn't care about your feelings. We care about your evolution. And sometimes evolution starts with a punch in the face. The words in this video? Yeah, they're rude. On purpose. Because if politeness worked, you'd already be profitable. If kindness built accounts, you wouldn't be searching for trading answers in YouTube's black hole. But here you are. And luckily, so are we. Some of you have been trading for years and still can't tell the difference between a range and a pullback. Still don't understand liquidity grabs. Still think the market moves because of psychological levels. Huh. No wonder your account looks like a meme stock in free fall. You're not alone. But you need to stop being one of the crowd. Here's the part that tempts you. If you're tired of flashy garbage, of empty strategies, of influencers who make money from affiliate links instead of trades, then subscribe to Traxing. Not because we're nice, we're not. Not because we're motivational, we're confrontational. But because we'll actually make you think, make you question, make you better. You're still here? That means something clicked. Maybe it stung, maybe it made you angry, maybe it made you laugh in denial. Perfect. You're finally alive. You're finally listening. And now you have a choice. Keep pretending or start trading. Real trading with knowledge, with structure, with strategy, and with spine. Because at the end of this brutal rant, you only have 2 paths. Swing like a pro. Or get swung by the market like a rag doll. This is Traxing. You've been warned.